Hello, and this is Global Business Insights, where we look deeper at the headlines from a business perspective. Donald Trump took the stage in Milwaukee last night, marking what many hope could be an incredible political comeback. His first formal speech after the attempted assassination on his life, as he accepted the Republican nomination, was a mix of sober reflections, campaign manifesto, and a call for unity aimed at firing up his base. He promised, amongst other things, more tax cuts, reduced interest rates, trade wars, and a border crackdown, and also from day one, drilling more oil, which he hopes will bring down inflation, even though he had said that he's not going to fire Jerome Powell. Also, he promised a break on pressure on Americans to buy electric vehicles. The United Kingdom June retail sales data came out today, down 1.2% over the month after rebounding 2.9% in May, also less than a 0.4% decline that was projected. Japan's headline National Consumer Price Index was steady at the 2.8% year-on-year rate for June. Meanwhile, core CPI inflation, that's inflation less volatile food prices, rose by 2.6% during the reported month when you compare that with the estimates for a reading of 2.7%, slightly lower. Christine Lagarde, president of the European Central Bank, yesterday left key rates unchanged, also giving clues on future actions and responding to questions from the press. Also yesterday, South Africa's Central Bank Governor Lesetja Kganyago said in a virtual press conference that the Monetary Policy Committee left the benchmark interest rate unchanged at a 15-year high of 8.25% for a seventh consecutive meeting. US stocks fell on Thursday, that's yesterday, as investors continued to move out of high-flying tech names. The technology-heavy Nasdaq Composite lost 0.8%, the S&P dropped 0.7%, the Dow Jones Industrial Average slipped 1.1%. The rotation out of tech stocks was still playing, with a combination of geopolitics hurting tech supply chains and the numbers suggesting earlier rate cuts, which could help cyclicals and smaller caps. Google's biggest acquisition to date could be a $23 billion acquisition of Wiz, an Israeli cybersecurity startup, if antitrust regulators give the deal the nod. And Netflix reported earnings after the bell yesterday, beating both the top and bottom line. Earnings per share came in at 4.88, better than 4.74 per share. Revenue also beat expectations at $9.56 billion. The Nigerian government and Organised Labour, after months of negotiations, have agreed minimum wage increases for workers, even as the government also pushes a one-time windfall tax for foreign exchange related incomes for banks in Nigeria. Christine Lagarde has said ECB main interest rates remains at 3.75%, as she said chances of a possible cut in September are still wide open. Christine Lagarde, president of the European Central Bank, said Q2 growth in the euro area was slower than the first quarter, adding that services led the recovery while exports and the industry sector remains weak, all pointing to muted growth in 2024. More jobs were likely created in the second quarter, she says, mainly in services, in a labour market that remains resilient. She also said wages are still rising at an elevated rate and domestic inflation remains high, expected to fluctuate near current levels for the rest of the year. The IMF had also warned in their latest update this week that sticky services inflation may cause major Western central banks to keep higher rates for a longer period than expected. This means higher costs of borrowing weighing on economic growth. Lagarde may be right to downplay fears of sticky price pressures, which she acknowledges, but what also may have been downplayed may be the uncertainty around geopolitical risk, either from the US elections or Middle East, Israel or Ukraine, Russia situation. A more protectionist and unilateralist globe could also mean new supply chain issues. Analysts agree that Lagarde's reluctance to clearly signal its next move was the prudent thing to do, given all the uncertainty and what may be the too early rate cut we saw in June. The Nasdaq slide for a second day continued the broader shift away from artificial intelligence driven technology seen in recent days. The small cap focused Russell 2000 was, however, up more than 8% in the last 5 trading days before dropping yesterday. Nasdaq has dipped over 4% in the last week. The sell-off seems to have spread now to small cap stocks after we saw that initial rotation into small caps appearing to be pausing. Small caps are seen as the most direct beneficiary of likely rate cuts. Analysts also pointed to a ramp up in prudence and profit taking with the recent tech trade. There was also a recent forecast challenging Goldman Sachs' prediction that artificial intelligence would boost US productivity by 9% and boost GDP by 6.1% over a decade. The new forecasts are dramatically lower, saying that the boost to US productivity is more likely going to be just about 0.5%, while GDP will be boosted by just around 1%. That's within the decade. Is the US stock market, including Nvidia, heading for several messy corrections? I see the AI revolution as inevitable, but we could, however, see a slowdown in terms of the initial ramp up, given the tepid economy, tight wallets, and all the supply chain issues associated with geopolitical tensions affecting smooth sourcing of materials. But have you noticed this is almost the sole source of optimism, coupled with a less certain rate cuts trajectory? No surprise, safe haven flows are booming. Gold year on year. If you look at a year ago, no surprise, safe haven flows are booming. Gold year on year is up 25%. Google is eyeing Wiz cybersecurity technology, which helps clients identify security risks in the cloud, such as which employees are using which apps or who has a weak password, also allowing customers to spot vulnerabilities that hackers could exploit. $23 billion is a lot, but Alphabet can afford it, and Wiz looks worth it. As the cloud market rapidly expands, cybersecurity services will also take off. Analysts see businesses spending around $300 billion worldwide on cloud services in the near term, implying new security vulnerabilities and, of course, new opportunities for startups like Wiz. In 2023, we saw global sales of cloud security products up by about 32%. Compare that to 13% growth for computer security overall. So there is definitely a bias to spend more on cloud cybersecurity, which is a space where the big spenders are also found. Wiz has cornered the cloud cybersecurity niche, while others mostly sell firewalls and other safeguards for traditional information technology systems. The second change that we see that is helping this deal, driving this deal, is increasing preference for one-stop shops to avoid duplications and save money. One-stop shops are easier to manage and tools talk to each other. This has encouraged acquisitions. According to JP Morgan Chase, we've seen over 50 security firms having been acquired this year. We're talking about cybersecurity firms more than in all of 2022 or 2023. Regulators will frown at the market strength this confers on Alphabet. This deal helps Alphabet up its game in fighting Microsoft in the cloud space. Still, regulators are more likely to conclude that the Wiz deal may hurt other smaller cyber players and presents distinct advantages for Google in a way they may not want to see. So it's 50-50. Netflix reported results beating on both top and bottom line as it makes gains in advertising targeting on top of 274.4 million paid memberships. A cheaper ad-supported tier has also been a success in addition to its crackdown on password sharing. Netflix said its advertising tier now accounts for 45% of sign-ups in markets where it is available, but they don't see this as a primary driver of revenue growth until much later in 2024 or 2025. In the first quarter, Netflix warned it will no more disclose quarterly membership numbers or average revenue per user beginning next year. Instead, it will focus metrics on revenue and operating margin as primary financial metrics, and will report on engagement, that is time spent, as a measure of customer satisfaction. Netflix is smart to pivot metrics to more about profitability and satisfaction indicators. Subscriptions could be meaningless as income implications, depending more on the mix that you have, but this could also be a way to mask market share losses. But subscriptions still count. Netflix added 8 million new subscribers in Q2 thanks to its hit shows. Apart from clever use of metrics, Netflix has been moving in the lucrative sports event space, leading to speculation that it would soon sign a big deal with a sports league. Netflix also says, though it's experimenting with artificial intelligence to drive more engagement with its users to improve discovery and recommendations, but focus, they say, still has to be on the quality of storytelling. So far, whatever Netflix is doing, they seem to be getting their marketing right, and they seem to be cementing their market grip despite all the competition as more increasingly move away from linear TV. The new minimum wage for Nigerian workers reported to have been agreed at 70,000 naira. That's just $43, up from 30,000 naira, more than double the previous rate. This was according to the Minister of Information, Mohammed Idris, at a briefing. Execution will not be easy for some of the states who struggled to pay the previous minimum wage and who had workers and pensioners going for months without pay. Private businesses also have to absorb higher costs with higher pay for their lower skilled workers. This could put some pressure on inflation and can help as domestic consumption improves. This is, of course, going to be seen as a first step by workers who expected more, and they see this as a continuous adjustment process guided by several principles. One, there has to be a shift to a more people-centric government which encourages provision of decent wages starting from government wages, which also must be linked more to published inflation metrics. The other principle that's important is affordability, which is linked to better productivity and efficiency. Smaller technology-enabled government enables higher pay for knowledge work, also implying much greater investment in upgrading skills and education. If skills are not upgraded as you increase pay, obviously you could have a situation of higher unemployment. This also means reforms or rethink of some of the fiscal structures. So some states are not bearing costs they cannot possibly afford. There are many difficult trade-offs that won't be resolved in a year, but what is clear is that the American-type democracy that is practiced in Nigeria is rather expensive for what Nigeria can afford, and we may need a different governance model with different fiscal structures. The solution certainly is not to perpetuate low wages, which are wiped out by inflation and stokes acute discontent. Beyond wages, there are other important issues for the government and private sector workforce, such as digitization, improving productivity, efficiency, and transforming the work culture to be more performance-oriented. Like I said in the previous chat, I do agree with windfall taxes, but they have to be focused, they have to be justified, they have to be fair, they have to be measured and time limited, noting the broader need is for a more attractive business environment in Nigeria that is more de-risked. To close, Asian shares look set to end the week on a somewhat lower note, given all the uncertainty stoked by tech sell-off, driven by deepening China-US trade tension. This is Body of Shosami. Thanks for sharing and following or subscribing on YouTube, LinkedIn or Facebook and X. Bye-bye.